You were listening to chartingwealth.com for Wednesday, the 19th of April, 2017. Let's jump right into these markets. We see that stocks, both the S&P 500 and the NASDAQ 100, down for the day. Bonds and gold are up, just like our weekly vertical crossovers are telling us they should be going. Let's first take a look at the S&P 500. We had our weekly vertical crossover occur on the week ending the 31st of March, and we have seen for the 3 weeks following that, the markets continue to move down in an orderly fashion. Derivative oscillators continue to heat up, and the PPO price percent oscillators continue to rocket down. Put a great training out last night, available at the website chartingwealth.com on the PPO, the price percent oscillator. You want to know more about the king of oscillators, please go listen to that. Again, it's under training at the website chartingwealth.com. We see so far this week, we've continued to see the S&P 500 move down. If you jumped in sometime that week around, the $236 mark, of course, the S&P 500 closed the day down at $233.87. So we like it, a little over $2.50 or so down since that time. Not bad for a 3-week period, is it? Those weekly vertical crossovers are magic. If you don't already receive our text messaging when those weekly vertical crossovers occur, you can easily sign up for our list by texting to the number 33222. That's on your cell phone. Under the texting function, the number 33222, text the word Charting Wealth. We'll put you on that list. You'll receive no more than 6 texts a month. Typically, it's 1 to 2 texts a month, and it will update you on these weekly vertical crossovers when they occur, just like happened this last Friday for the week ending Friday the 13th. Friday, the markets weren't open. It was Thursday the 13th. It was Good Friday. We had a weekly vertical crossover occur. And of course, we fired off to everybody on our list the notice of that. That happened on the Qs, QQQ, the NASDAQ 100. What have we seen happen since then? Well, the new week opened with the market going down. We have a red down candle that is forming for the week. What do we see happening? Of course, derivative oscillators in the red, and we see the PPO price percent oscillator moving down. If we look at our 2-day chart, what do we see? It's continuing to move down. Derivative oscillators heating up with more downward pressure. For the last 2.5 days, well, yes, we have the chart ending on Monday, the 17th, and of course, that's the 2-day chart ending. Then we have the first day of the newest 2-day candle, and what do we see? See the market sliding sideways again, moving down. We were down for the day 0.15%. As we look at how things happen throughout the course of the day on our intraday chart, on the 2-hour chart, we see that the market crossed over going up at 2 p.m. over the course of Monday afternoon. Started off a little up in the morning on Tuesday, and then moved down strongly in the afternoon around the 2 o'clock hour. Ended up a little up at the end of the day. Overall down 0.15%. We do see that our 2-day chart is still continuing to move down strongly, as is our weekly. Hopefully you found a good point to jump in over the course of the day on Monday, or even better on Tuesday. Please continue to monitor this wonderful weekly crossover that we had occur. Make sure you get some of that action. We do see the Bollinger Bands narrowing sharply. What does that mean? Well, it means that volatility has been reducing as the Bollinger Bands get tighter, and on our charts, they're blue dashed bands with a blue center, and we see that as price movement slides sideways and tightens up, the Bollinger Bands increasingly tighten. So we're watching that occur at this time as the market continues to trundle down. As stocks are going down, where does the money go? Well, of course, if we take a look at First TLT, and then gold, we see that these are inversely related to stocks typically because they're where money flees when stocks go down. And of course, we saw a bottoming back on the week ending. In fact, yes, we're on the weekly chart. On the week ending on the 3rd of February, we saw the weekly vertical crossover occur on TLT, the 20-year bond fund. It went up over the following week, little down the week after that, then up again on the week ending the 24th of February. Then it went down for the first 3 weeks in March, and then starting on the week ending the 24th of March, it really kicked in and took off. The 2-day chart also rotated over around that time period, specifically on the 2-day chart ending the 22nd of March. And of course, it's been rocketing up ever since then. The last, 3 2-day candles have just been powering up unbelievably. So if you jumped in back there around 119, 120 after that 2-day, after the weekly vertical crossover occurred, you got a little shaky as things started moving down and the 2-day candle crossed back over there around the 8th of March, but then it bottomed back out. The 2-day candle crossed back over and things started rocketing up rather nicely, and we've seen it continue to go up. If your jumping in point was somewhere around the 119, 120 mark, you're all the way up to 124.28 at the end of the day. Again, these weekly vertical crossovers are beautiful, and when you time them with your 2-day candles, they can work even better if they get off to a rocky start. Remember what we talked about. The reason all this was happening is the market was trying its best to top, and it did not want to give up that up movement when we start talking about what stocks were doing. Money was fleeing to bonds and then sort of rushed away from bonds and then back into bonds starting sometime around the 16th of March. And you've seen bonds continue to go up since then. Now, lastly, we'll go back to our weekly chart and we will take a look at gold. What is gold doing? Well, gold crossed over on the weekly chart, going up all the way back on the week ending the 27th of January. Went up for several weeks until it topped out right around the 10th, right around the week ending the 3rd of March, down the 2 following weeks, and then that 2-day chart rotated back over. Gold started shooting back up on the week ending the 24th of March, and then 5 weeks it has been rocketing up. We look at our 2-day chart. Yes, we see that actually it rotated over, going up on that Friday the 24th of March, ran sideways on the 2-day chart for a little while, and then really started taking off over the last several candles, moving up. Of course, if we zoom in, remember how we talk about how beautiful that 4-hour chart is? Well, that beautiful 4-hour chart rotated over, going up for gold on the 2-day chart, the 4-hour chart on the 11th of April at noon, and has moved up strongly since then. Again, just absolutely beautiful. So we have our charts all moving in the directions that our weekly vertical crossovers predict, and we are very happy, my friends, with where things are going. Continue to monitor these charts. Look specifically at those 2-day charts and then how your weekly chart is performing when you start looking at exiting points. If you just don't get happy at some point with the profit you've achieved, then you pull out and just take your profit and enjoy it. So again, these are virtual trades. We're not a stock calling service. We're an education firm, but we want you to practice with us. And when you get really good at this and you know exactly what you're doing, you can make up your own mind when and if to use your own money. Thank you so much, my friends, for being with us. You have questions, problems, concerns, let us hear from you. Again, be sure to tune in to the new training we have on the price percent oscillator under trainings at chartingwealth.com. Again, we're so happy to have you with us. We'd love to hear from you. You have questions, problems, concerns, let us hear from you. Sign up for the weekly and the daily podcast that we provide for you at chartingwealth.com. Just put in your first name, your email address. We'll get that information off to you. All the best. God bless. Take care. From chartingwealth.com.